What's going on? Welcome back to the channel. Today we're going to talk to you about Opendoor. I want to go over some of the data points, break it down what's really moving it, and why right now might be a optimum time to buy. Before we get into any of that, make sure to hit that thumbs up. And with that, let's get right to it. So Opendoor is down 2.6%, 691 the low, 725 the high. So a lot of the fear being rolled over from yesterday, which started because of a lot of the regional banks. So a lot more kind of delinquencies than anticipated, kind of contradicting exactly what the big banks did state on Tuesday. So we are kind of going old school back to 2024. I brought this up in my video yesterday. But one thing that really got us out of the slump back in early 2024 was earnings season. More specifically, tech. Tech AI had home run earnings, showed a lot of growth, and that's what got us out of that slump. So potentially that could be rectified next week. But given the circumstances and the fear and the back and forth with China, you are now seeing the likelihood of cuts increase. So right now for the October 29th meeting, you have a 1% likelihood of a 50 basis point cut. And for the following December 10th meeting, you have a 5.8% likelihood of a following 25 basis point cut, which in my opinion, as I've mentioned in previous videos, I do not feel any of this has been fully priced in yet, but you do have Fed speakers saying that they're actually anticipating 3 rate cuts. And so that's going to be very good, very positive for the broader market, very good for Opendoor. So I know right now does seem very, very doom and gloomish, but as I mentioned back in 2024, this type of very similar fear only lasted about a week at max. And then technically we kind of moved higher, forgot all about it. But this time around, we could still have that same reversal, but we have on the table now multiple rate cuts. So again, it's all up to your own interpretation. If you feel that we're going to be going down, do whatever is best for you. But times of fear, right now we are actually under the extreme fear category. That's usually the best time to buy. Looking back, even though we're kind of close to all-time highs for the stock market, with us being under the extreme fear category, again, we might look back to this time period and wish that you bought more. So again, you go do whatever floats your boat. There hasn't really been all that much in from news from the company itself. So no press releases, no SEC filings. CAS has been very silent. No posts on social media since the 15th. So probably he got the head nod or anything like that, that technically you're in a blackout period and you should be relatively quiet leading into the earnings. So that most likely is going to be the next big catalyst, and closer to the date, which is slated for November the 6th. I'll do a little bit more of a deeper dive on what Wall Street is actually going to be paying attention to as good, bad, and the ugly, some key elements. But for right now, the current estimates for the earnings per share is -7 cents, revenue 881.9 million, and then revisions over the last 90 days, 1 positive and 5 negative. So something just to keep in mind. At the time of doing this video, shorts are increasing 157,000 shares, 21.65% of the free floats being shorted, works to be 153.5 million shares overall being shorted. Short score 66.83, so the higher the number, the higher the likelihood of a squeeze happening. And shorts just overall have been lingering. They haven't really done too much, kind of sticking between that 19 and 22% range. So shorts are just waiting. No different than a lot of retail investors and institutions. They're waiting for the next big catalyst for Opendoor. And that's specific to Opendoor, not counting rate cuts or anything like that. So Opendoor really needs to prove themselves, and their upcoming earnings is going to be make it or break it. And trust me when I say that, it's going to be completely, like, if they flop in their earnings, don't really give good future guidance, that's going to kill completely the momentum, most likely for good. So it's going to be a very, very important earnings. As far as options, 7.08 million in calls, 2.9 in puts. 47% of all the options being done today are bearish in nature. From a bull standpoint, you see a consensus for it to be closing above $7. Bears are anticipating for it to be a sub 650. So you kind of see us having a little bit more upside, but with today being Friday, just take note of this. So you have 16,000 in open interest at that $6 strike price, 13,000 at that $5, 7 at the $7 strike price, you have 14,000, and then so forth and so forth. I think it's fair to assume that 750 and above, they are going to all kind of expire worthless, which is the downside of, I guess, doing options, but it is what it is. At the time of doing this video, this is why I always bring up this and where volume is actually coming from, because based on this, you actually do see institutions actually buying the dip with Opendoor. So one of the biggest attributing factors for Opendoor to get suppressed today is because of algorithmic trading. And of course, that's feeding off of the negativity in the broader market. And then you also have shorts. So big money is actually buying the dip. You do have a couple of sells. Anything with the bid is you sell, but basically you do see a lot of buying. So kind of a good thing. These are all the transactions occurring on the dark pool above $100,000. So definitely a lot of activity here. A lot of this is linked to shorts and hedge funds and all the other fun jazz. Aside from all of that fun stuff, with it right now at 685, it is exactly on this S2. So that's going to be a key pivot to ideally and best case scenario close above, and then 738 will be the following kind of target slash resistance. $6 will be the next strong support. So very important for it to kind of close above that S2 for today. Aside from all of that fun stuff on the actual chart itself, you can kind of see just based on the flow, algos are in full force right now. It is still wedge bound between that 10 and 50-day moving average. If things go pretty much the status quo over the next couple of trading days, most likely by next week, tail end of next week, you will be having the 50 and 10-day moving averages kind of converging. So that is going to result in a pinch, either a significant pinch higher or potentially lower. So we are going to be seeing some pretty crazy price action over the next little bit. But aside from that, we are just consolidating with the broader market. So like I said, even though it does seem very doom and gloomish right now, if you do believe in Opendoor, take advantage. And I've been really signaling this over the last little bit. So hypothetically, let's say you just assume $8 is on the table. And I give random, obviously, price targets like this on with these examples on a side note. So let's say you do feel $8 is realistic by, let's say, January, for instance, you could technically buy a long call, which would give you a 23.08% return on risk versus the stock price going up 17%. You can kind of extend that a little bit further if you do a long call spread, giving you 196.3% return on risk. Or if you are very, very optimistic and you feel $82 is on the table, then you could make almost 8,000% on a long call. So I don't really follow exactly what Eric is doing, but if I was Eric and I actually thought that $82 was on the table, I would choose January 21st, 2028, 828 days out. And yeah, I could make 1,700% on my call. So yeah, definitely look at doing options. I know during times of fear, that's kind of the best time to make the most money through options. So let me know your thoughts. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. Give yourself a shout out if you are buying, if you're selling, or what you are doing with Opendoor. Then one final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto. Put out daily day trades, numerous swing trades. Worthwhile to pop over there and check that out. With all that said, appreciate all of you watching.